From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli. It looked like we were going to potentially hit a record today, Nadine.
Well, all things were a go, particularly when it came to the mining space, and that is despite seeing iron ore prices retreating. So yeah, the banks also coming to the party today. I'm getting a little bit ahead of ourselves because we will detail some of those sectors in just a moment. But yeah, the talk of the town really was that Rio Tinto bid confirmed and financials behind it for Arcadium Lithium.
Yep, and a friendly takeover. We love that. They've really, both sides said it was compelling, fair price, etc., etc. Martin Lakos talking about that with me earlier. You can catch his interview up online in a moment. Let's get, though, to the overall themes of the day. So a little bit of a Thursday thrust.
Oh, that's risque.
Yeah, it's risque. It was not me, but
I like it.
It's very risque for a Thursday. But yes, we got nearly at a record, up half of 1% on the close, it looks like, on the ASX 200, 8,223. You mentioned some of those big moves coming through in the iron ore players, even though iron ore itself was retreating. Of course, a lot of hope on this China stimulus. The Ministry of Finance meeting on Saturday, they have announced.
So it was a little bit of a fizzle yesterday, but everybody that I've been speaking to, and I know you have as well, saying that perhaps the market just got a little bit ahead of itself when it came to that Chinese stimulus narrative, considering the gains that we saw in Asia in particular, and with some of the mining companies here as well. We'll get there. Let's not rush it. We've got that hurricane bearing down on Florida, in fact, making landfall. Very serious situation there. So we'll continue to just watch that with horror, really, what it will mean there. But of course, you know, through a market's perspective, we're keeping our eye on some of those Australian listed companies that do have exposure in the United States as well.
Yeah, and Johns Lyng, I think, was up by something like 6%. Let's have a look at those lithium players after that friendly takeover bid we mentioned. From Rio to Arcadium Lithium, and Pilbara Minerals, they're up 3.5%. Liontown up almost 7%.
Yeah, so I was reading a lot of the broker analysis that came in through it, and just, you know, E&P comes to mind, for example, saying that it means that there could be some more M&A amongst some of these smaller players. They named Mineral Resources and Pilbara as their favored pick, but I did speak with my guests, I'm just foreshadowing our stock of the day, about this deal on the call, and I will tell you that Mark Gardner from MPC Markets, you'll recognize him from this show or podcast, they actually sold their Arcadium Lithium and bought Liontown instead. So there's a tidbit for you.
And that was, remember we were talking yesterday about Jonathan saying anything under $1 was a good buy for Liontown. Okay, having a look at the miners, Fortescue certainly had a good day, 5.5% gain.
Whoa.
Just under $20 now. Mineral Resources also a very solid move today.
Yeah, that is a solid move. I had my eyes off the market just in the past little while or so this is news to me, but Santos was a double buy on today's episode of The Call. If you'd like to take a listen to that, you can go to www.ausbiz.com. But yeah, a reflection of some of the enthusiasm in terms of some of the buying opportunity yesterday after it got hit with those oil prices down.
Yep, okay, let's get to the top stories. We talked, of course, about Rio and Arcadium, and it's going to become one of the biggest lithium producers in the world now, Rio Tinto, with this expected friendly takeover, and Arcadium up by a cool 38%.
Wow. Okay, Parenti rose 2-year extension with IGO to mine at the Nova Nickel mine in WA.
Net wealth also higher. It posted an increase in FUA thanks to some new money and positive market movements as well.
And Guzman and Gomez, GYG, it fell, and that's despite reporting a 21% jump in sales in the September quarter and confirming FY25 guidance. I think there is a bit of a view out there that it's just fully priced, all the good news priced in.
Yeah, well, holy guacamole, speaking of. Welcome to the COB, Julia Lee from FTSE Russell. So nice to see you, Julia. All right, let's get into your thoughts on the market today. We didn't quite hit that record.
It was a good session for the Australian share market. So nice to see the miners doing well, especially after that roller coaster ride yesterday where the NDRC was expected to announce extra stimulus. And of course, the market didn't get the hit that it was looking for. But the miners did well because we did see China's market coming back today and with a positive gain, and then adding that positive move from US stock markets overnight, and the Aussie share market looked pretty good. Looking across the sectors, most sectors did trend higher. Of course, the highlight was the materials and the financial space. But there's only a couple of sectors in the red today, so it looked like broad-based gains. The other thing to be watching on the Australian share market is just the size. And if we have a look at the small ordinaries versus the ASX 20 and the broader ASX 200 index, what you'll notice is that the small ordinaries outperformed today. And that's really a sign that investors are willing to take on a little bit more risk and are pretty confident in the rally that we're seeing at the moment.
Yeah, you did mention that record finish both for the S&P 500 and the Dow last night. So in terms of flows, Julia, is it fair to say that still the bulk of investor money is going to US equities, or are we starting to see a little bit more heading to places like the UK and Europe as well?
Look, this has been a trend that we've not been only seeing over the last 12 months, but probably since the global financial crisis, that more and more money has been flowing to the US, and it's been taking a greater piece of the pie in terms of weightings. And that's really what our analysis shows as well. Having said that, a big part of short-term flows is going to be all about third quarter earnings season, which really kicks off on Friday with some of the biggest banks in the world and financial institutions reporting. And expectations for this third quarter earnings season is still for earnings growth of about 3.4% on revenue growth of about 4.4%. Now, those estimates have come down substantially over the last 6 months. And of course, really, we do need to see the US stock market hitting those targets or exceeding those targets for this rally to continue, because the fundamentals are very important when you see valuations at this level. Having said that, if we have a look and contrast China's stock market valuations to the US, while the US stock market is at record highs, China's valuation in terms of the stock market earlier on in the year have been trading around about 15-year lows. And traditionally, what we have seen, historically, what we've seen is that valuations around these relatively low levels have boded well for investors who are investing for the long term. So hopefully that's a sign of more flows to come towards our region versus the US, but the US certainly having a stellar run this year.
Mm-hmm. Well, speaking of the whole China story, Julia, I mean, there was a lot of stimulus skepticism perhaps yesterday that impacted trade, but you're starting to see some good repricing in some of our miners, some of the other stocks related to the China story like Treasury Wine. It probably is likely we'll get more stimulus. How do you see that all playing out?
Yeah, I guess when you're looking at it from an investment point of view, you're looking at the two largest economies in the world and what's happening. In terms of the US, we've started to see a rate cutting cycle, which should add some stimulus to the economy in the US. And then when you look at China, once again, you're seeing a stimulus story there. So you've got the two largest economies in the world now looking at stimulating their economies, which should be better news and a better backdrop for investors. Having said that, there are a few risks to that story as well. And I think top of the list at the moment would have to be oil prices and the conflict in the Middle East. We have a look at oil prices and geopolitical risk. We know that last week we saw oil prices surge. And the reason why that's so important to investors is that earnings story. When we have a look at oil prices, it's a major input into earnings expectations because most goods and services require transportation. So through transportation costs, we do see a dampening effect in terms of earnings if we continue to see oil prices climb. So I think oil is a key risk to be watching at the moment. At the moment, we are seeing oil prices trending higher. There are a number of impacts, short-term impacts from the horrible hurricane over in Florida, as well as just in terms of the Middle Eastern conflict, in terms of the supply side and concerns there.
Yeah, Julia, sometimes it would be nice to just skip some of the general news that's going on around the world because it's so, a lot of it's really depressing. But we've got the US election. I've read so much analysis that we should just look through any of the noise and that it doesn't really matter who eventually becomes the next president of the United States. What's the house view there at FTSE Russell?
We don't have a huge view in terms of the US elections, but what we can have a look is what's happened historically. And if you have a look at, I guess, the impact on politics and the share market, in the year after and the 2 years after, there's not a huge impact. I think what drives the stock market is really about companies' earnings, the economic outlook, and the fact that we are coming to a bit more of a slowing part of the cycle, I think, is more more important to investors. The interesting thing at the moment is, though, although most economists are predicting that the US and the global economy will be slowing down, what we've seen from the economic data is that things are still relatively strong. So is it possible that we start to see a recession where people don't lose jobs and consumers continue to spend money? I guess is the scenario that's being played out and maybe thought about in investment portfolio. So a really interesting time, I think, given that most economists do expect to see a slowing down in terms of the US economy and the global economy, but the data lately has pointed to a much stronger picture than what's priced in.
Well, Julia, it's short but sweet today, but boy, we're glad to have you on the COB.
Yeah.
We hope to see you again soon.
Lovely to be here. Thank you.
Take care.
Speaking of the China story, I just saw China's going to resume rock lobster imports by Chinese
that was one
New
of the
Year.
last trade imposts that China had left in terms of Australian goods. That's an interesting one. And it's making me a bit hungry. So why don't we take a look at what was, I believe, the stock of the day. It was Rudy, no, it was not Rudy. It was Mark Gardner from MPC Markets and David Lane from Ord Minnett.
There's a lot of shareholders out there that are just breathing a sigh of relief. But look, yeah, whilst RBS says that it's a compelling offer at the moment, I'll, in about 5 years' time, go back and revisit that call, and I think they will likely be wrong. Obviously, there has been a lot of small players in that lithium sector, and the fact that the big guys are now basically saying, I think a comment from Rio was basically that they can't start this mine, like for what they're paying for it, basically. So there's value for the big players there.
I guess it does provide a bit of a confidence boost for lithium in general, because what Rio is saying is that long term, we actually think that there is value in these assets and that the demand for lithium will improve, and that with Rio's strong balance sheet, they're able to fund a lot of the development of the mines that, as Mark said, Arcadium were struggling to come to the table and put new capital into these assets. So I think long term it makes sense for Rio.
All right, let's have a look at the market leaders today. We know there's going to be lithium players in there. Arcadium Lithium up 38%. Mineral Resources, Liontown, Sayona Mining, and Weebit Nano also doing well.
Yeah, Osteopore, OSX is on the list, as well as some of those best performers. So that interesting one in the smaller end of the market. And let's get to some of the laggards. Webjet Group down by 4%. Fletcher Building off by 2.95%. AMP Ansell off by close to 2% in Spark New Zealand as well.
In the smaller end of town today, we saw gains coming through again from a lot of the lithium players and mining players. Rand Mining up by almost 43%, and Orthocell had a good day too.
I spoke with the CEO just a couple of days ago prior to the announcement being made that sent its share price up by 22%, but you can take a listen anyways to find out what's going on at the company. It's online at ausbiz.com.au. Flip the page and we will see likely motley crew of names here, but close the loop. Interesting, down by 10%. I wonder if that's on any news. I don't see it right now in front of me, but we'll be keeping our eye on that one. Yeah, let's just see what's happened here. And it looks as if it's been, price target's been cut by Shaw & Partners by 14% to 60 cents per share.
All right, let's have a look at what is due tonight. Of course, the inflation print for September out of the US, along with the weekly jobless claims. And never a dull day in terms of Fed speakers, is it? Tonight we get Cook, Williams, Martin and Barkin.
Yeah, FOMC speakers unite. But yeah, we've got Daly, Barkin, and that CPI print is expected to be quite benign. Risks actually, in Westpac's view, are skewed to the downside. So that's outside of one-off pressures associated with strikes and the weather. And of course, a very wary eye, as we already mentioned, on that hurricane that is hitting Florida as we speak.
All right, tomorrow, not much at all. We really had to search quite a lot around, but we found that there's PMIs in New Zealand.
Good for us. It's a Friday, and look, we don't have any even major AGMs that I can see on the horizon as well. So we are making our way toward that US session. On a positive note here in Australia, we've got the S&P ASX 200, that's the CIBO Australia index on your screen, but look, they're moving lockstep at 8,223. We've got all major markets across the Asian region higher at this point. I dare say that the Hang Seng will remain in positive territory as it's up by 4.4%, the composite up by 3.3%, and E-minis in the US also just mildly higher.
All right, well, we finished there, as we mentioned, up by about 0.5% there, and not a bad day all in all. I think we can thank the miners and that friendly offer by Rio for Arcadium
Wall Street
Lithium
as well, I would say. So we'll see what happens tonight with that inflation read, and we will get you all across it first thing tomorrow morning.